Happy Friday, Brian Manning here with your weekly update. Is it Friday again? My gosh, I can't believe it. These weeks just roll by. This is a big week, as most of them are, and let's get right to it. We got a lot to talk about today. Monday this week, stocks were just continuing their downturn, and as stocks were going down, that was certainly helping out mortgage rates move lower, and we had some big news on mortgage rates this week, and with some new lows that they'll hit, so we'll get to that in a minute. Tuesday this week, we got housing data. So CoreLogic came out and said that in December of last year that homes that were in some sort of the foreclosure process were down to 433,000. So it's amazing if we look at that in comparison to December of 2014. At that point in time, there was 568,000 homes at some sense in the foreclosure process. So right now we're down to a 7-year low of homes that are in the foreclosure process. So really good to see on a national level, and certainly seeing the final kind of evening out of the housing market. Wednesday this week, big day, Janet Yellen testimony. Always a market mover, and certainly had to walk a fine line in her testimony. And you know, Yellen stated that they have to be data dependent on what they're going to do for future rate hikes. And she did not throw in the towel on future rate hikes, but she certainly did say that they would move to negative rates if they needed to, based on the global economy and lack of inflation in the U.S. You know, we talked about this a couple updates ago. The Federal Reserve puts out what they call their DOT report for the year of 2016, and that's where members think that how many rate hikes will take place. And the DOT report said most general consensus was 4 rate hikes for for 2016. And as I said, I just don't agree with that. That's completely overzealous, and I'd be surprised if we even see 2. So, and now you got Yellen talking about potential of negative rates. So who knows? We'll see what happens. Thursday this week, unbelievable. 10-year Treasury yield hit the lowest since September of 2012, which also means mortgage rates hit their lowest level since 2012 in September also. Unbelievable. So U.S. bonds have been very appealing lately. We have foreign investors that are purchasing U.S. bonds. We have instability in the U.S. economy. Stock market's going down, so you're seeing influx of money there going into U.S. bonds. And as money is moving from around the world in stocks into U.S. bonds, this is what's causing the 10-year yield to go down and also helping mortgage rates. But yesterday, 2:40 Eastern time in the afternoon, got a rumor out there that OPEC says that they may cut production. And I know that this was just hearsay, but this certainly did move the markets, and stock markets rallied on this news, oil rallied on this news, and certainly caused a turnaround in the financial markets. So today, it looked like stocks were really looking for something to feed off of to continue their rally in the marketplace. We got retail sales. Retail sales were much better than expected in January, and certainly gave fuel on the fire for stocks to continue their rally. So mortgage rates are up slightly higher from their all-time 2-year low yesterday. Not very much. There's a very slight increase in mortgage rates today, so not a big deal. I will be around all weekend. If you have any questions, please let me know. If you have any buyers you want to get pre-approved, please give me a call. Certainly would love to be part of your business. Have a great day and happy Friday.